Hi guys, welcome to my channel. Thank you for subscribing, and if you are yet to subscribe, kindly hit the subscribe button. In my last video, I promised to make a video on Wyckoff distribution schematics, and so today that is what this video will be all about. If you go online and search for Wyckoff distribution schematics, you will find all of this. Trust me, you don't need all of this. I remember when I first wanted to learn Wyckoff, I went online and I saw all this. I was like, no, there's no way I'm learning all this. This looks so complicated. But later on, I was able to get a more simpler approach to all of this. I was able to get it. So I'll be explaining how to use Wyckoff in a very, very simple way. And also this Wyckoff was invented by one American stock trader, Richard Wyckoff, in the 1900s, and this was his strategy in trading the stock market as far back as then. So now let's move on to our charts. So now for Wyckoff distribution schematics, Wyckoff distribution schematics. For these schematics, it is used to find sells in the market. Okay, it's used to take sell trades in the market, and all you need is just 3 dry stop. 1, 2, 3. Oh, that's all you need. This is the major thing that we need to see. Okay, we need to see 3 eyes, that is this one, and this one. Okay, so but each of these eyes represents something, they mean something. Okay, so for this first eye, this is the beginning of the distribution schematics. Okay, and it's called the BC. This BC is what we call buying climax. Okay, this is the buying climax. This is the first phase of the distribution. After the buying climax, we have the automatic rally. Okay, then we have the secondary test. So I think let me stop there for now. So the BC is the first of the distribution schematics, is the beginning of the distribution. Then we move to the automatic rally. Then we have the secondary test. Okay, the secondary test also mitigates the buying climax. That is, it comes back to test the buying climax. Okay, it comes back to test the supply zone close to the buying climax. And after this secondary test, we move on to what we call the sign of weakness. Okay, also known as sign of weakness. The sign of weakness takes out the automatic rally. Okay, takes it out to be breaking the automatic rally. Then after, we have what we call the Upthrust. Okay, we have the Upthrust breaking above the buying climax, taking out both the buying climax and the secondary test. Okay, so after the Upthrust will always go back and mitigate at least the 50% of our trading range. Our trading range is between the buying climax and the automatic rally. Okay, so the UT goes back to mitigate at least the 50% of this trading range, at least the 50%. Okay, so once we have that retracement, this retracement then proceeds to give us what we call the UTAD. Then we have the UTAD. The UTAD now takes all of the eyes, that is the eyes from the buying climax, the secondary test, and the Upthrust. The UTAD takes all of it out. Okay, so this UTAD signifies the end of this distribution. Okay, It signifies the end of this distribution. But before we can say this UTAD is valid, the UTAD will proceed to take out the sign of weakness, that is breaking. The UTAD will break below the old distribution. Now, this is the old distribution, right? From the buying climax, the AR, the SAL, the ST, the UT, and the UTAD. For us to know that this UTAD is valid and confirmed as the end of our distribution, it needs to break below the old distribution that we have right here. Once we break below this distribution, we know we have a valid UTAD. Okay, so once we have our UTAD breaking below the sign of weakness, then we start to look for our last point of supply, which is called LPSY. LPSY. That is the last point of supply. This last point of supply, about that. This last point of supply is found in the range between the buying climax and the automatic rally. That is in this range. Find the last point of supply. This last point of supply are just supply zones that you will find in this leg of movement. It can be, sometimes it can be imbalance, it can be an order block, but mostly it's a supply zone. That is the zone that was left behind when we broke below this SAL. Okay, so at this area, you will start to look for, possible sells in the market. Okay, targeting the previous low or wherever you want to take your profit. So this is what the distribution schematics does for us. It allows us to find entries for sell in the market. And when you are looking for distribution schematics, you want to look for distribution schematics at the top of the range, at the top of the chart, in supply zones. Okay, we want to look for them in supply zones at the top of the chart. We have two types of Wyckoff. We have the distribution schematics and we have the accumulation schematics. The accumulation schematics will be in the next video. I'll be explaining the accumulation schematics in my next video. Accumulation schematics, we look for them at the bottom of the range, that is the bottom of charts, okay, in demand zones, whereby distribution schematics, we look for them in supply zones at the top of the chart. Also, distribution schematics happen on all time frames. You can find it on all time frames because the market is factor. You find them in all time frames. You can see Wyckoff in 1 minute, 3 minutes, 5 minutes, 1 hour, 4 hours time frame. Any time frame, you can find Wyckoff on any time frame. You just need to train your eyes to be able to see this distribution happen. Okay, you just need to train your eyes. So now we sometimes may not have the perfect Wyckoff distribution like this. Sometimes we have incomplete Wyckoff. Let me show you an example. Sometimes we may have the buying climax, the automatic rally, the secondary test, the sign of weakness, then we have our Upthrust, then we break below our SAL. Okay, so in this schematics now, this is an incomplete schematic because we don't have the UTAD. Okay, we have the AR, we have our ST, we have this SAL, then we have the Upthrust. Okay, so in this case now, we don't have a UTAD, but we can see that we broke below this SAL already. So sometimes we may have this incomplete distribution, but that doesn't mean it's not valid. All you need to look for is look for your last point of supply around this zone and take your sell. Okay, so this is an imperfect distribution schematic, but at the same time it's still distribution. Also, there are some scenarios whereby we have a buying climax, automatic rally, secondary test without a show, a sign of weakness. We may not have a sign of weakness. Then this ST proceeds to give us a upthrust, then goes ahead to give us a sign of weakness, then goes ahead to give us UTAD, then the UTAD breaking below the sign of weakness. So in this scenario now, we can see that the sign of weakness, the ST, this right side, okay, let me label that first. Buying Climax, AR, ST, UT, UTAD, and SAL. So we may have scenarios like this where the UT gives the sign of weakness instead of the ST, okay? But that doesn't mean this is not distribution. This is still distribution. And also, all you need to do is wait for the break below this cell, that is the last low of the distribution schematics, and look for your cells at the trading range, okay? The trading range is between the buying Climax and the AR, and look for yourselves, okay? So have this in mind that we may not have the perfect distribution schematics. So that's why you need to back test. This is the importance of back testing. Go on any chart, look for supply zones, and look for 3 drives up, that is the buying Climax, UT, and the UTAD, and try and see the different types of distribution that you can get on this chart. So now let's go and check for, let's go to a real chart now and look for this distribution schematics. So starting on the 1 hour time frame, we'll be using Gbpcad as our case study for this distribution schematics. Let's go back here. So on Gbpcad, we can see on Gbpcad, we can see on Gbpcad on the 4 hours time frame. I think this 1 hour, okay. On 1 hour time frame, we can see that Gbpcad has came from, let's just take from this low, high, low, high, low, high, low. We can see that this has broken below this low, this structural low. Okay, price has broken below it, and in our smart money concept trading strategy, we know once we have a break of structure, the supply zone that caused the break of structure, okay, the supply zone that caused the break of structure, price will most times come back to mitigate those zones, okay? So now in this case, we can see Gbpcad break below this low right here, okay, signifying and showing us that we are going bearish, okay? So now the supply zone that caused this break of structure, is right here from the 1 hour time frame. You can see the supply zone right here. Although this supply zone looks mitigated already, and that's why you need to check different time frames. Also, there are times whereby the market mitigates the supply zones more than one time. You can have 2 times for price coming back to mitigate a supply zone. Okay, so now from the 2 hours time frame, you can see this as our supply zone. That is this last bullish candle before all this movement down. Okay, you can see the last bullish candle this last bullish candle before the movement down. Okay, so this is our supply zone. Okay, this is our supply zone, and now we are looking for possible sales in the market. But because this supply zone is big, okay, we can see if we are to take our entry from the open of this supply zone, we'll be having a 46 pip stop loss, which is way too much. 46 pip stop loss is too much for SMC traders. Okay, we don't want to be having such big stop loss. Okay, so now what we can do is, since we don't want to use a big stop loss, how can we refine our entry? Okay, using Wyckoff. Okay, you can use normal, let me see, you can use the 50% of a particular supply zone to take your entries like this. You can use the 50%. This will give you a more reduced stop loss. Instead of using the open, you can use the 50% of your trading zone, which gives about 22 pip stop loss. Okay, but now that is not our focus right now. We are focusing on using Wyckoff. We are looking for distribution schematics in this supply zone. So now, and as we can see, when price got into this supply zone, it started distributing. Okay, it started distributing. So all you need to do is go on a lower time frame. So now on this 45 minutes, time frame, I think that was on Monday or Tuesday, I can't really recollect. I saw that we had distribution going on. I could remember I took a buy at this zone. Yes, so on this chart, I can see 3 drives up already. 1, 2, 3. This tells me that we have distribution going on. Okay, so now let's label it. We have the buying climax. You can see automatic rally, secondary test, retesting our buying climax. Then we proceed to have the sign of weakness, breaking below this automatic rally. Then we have our UT. Okay, then we have our UTAD. Okay, so now that we have this, now that we have all of this, let me draw right here. So we can see that we have our schematics in place. Now all we need to do is wait for entry. Okay, and we said before, when I was explaining the other time, I said for us to know we have a valid UTAD, our UTAD must break below our sign of weakness, right? Okay, it needs to break below our sign of weakness. And like I told you, sometimes we may not have the perfect schematics. Okay, but in this time, if I was on the chart right now, I'll set an alert right here for price to break this low. Once we break this low, then I know my distribution is complete. Okay, I know my distribution is complete once we break below this whole schematics. So let's play. Now we can see that we broke below this cell. So once price broke below this sign of weakness, all I needed to do is now start looking for my entries. I'm now looking for my last point of supply, that is the LPSY, where I will take my sell trade from. Okay, so also always make sure you go from different time frames to different time frames, so you can be able to see different areas where you can take your entries from. You should not remain on only one time frame, because sometimes you may not see an entry or a clear supply zone or a clear order block or imbalance on a particular time frame, you need to go and look for it on different time frames. Always search. Okay, so I think on, you can see from the 30 minutes time frame, I couldn't find any entry, no imbalance, no clear supply zone. On the 1 hour time frame also, I couldn't find anything. And the 2 hours time frame also, I could not find something also. So, but on the 3 hour time frame, the 3 hours time frame, I could see this last candle with little imbalance. Okay, with little imbalance right here. There was little imbalance left behind. So I knew this is where I would take my entry from. This is my last point of supply, LPSY. Now this is where I will take my sell from. But as we can see, this zone is about 29 pips stop loss. Okay, this zone is about 29 pips stop loss, and trust me, I don't want to enter a trade with 29 pips stop loss. I don't want to, because it's way too big for me. So most times my stop loss is from 2 pips to 15 pips. I don't go beyond 15 pips. And so now all I needed to do is I decided to take the 50% of this 3-hour candle right here. I decided to take the 50% of this, giving me a 14.3 pips stop loss, and I was okay with that because I knew this is my LPSY. I knew price will not go beyond this because we already have our UTAD take out this sign of weakness. Okay, so I refined my entry to the 50% right here. Find my entry here. Then also for my take profit now, I cited this imbalance right here, this gap that the market left behind when the price was pushing up. So I knew if we are selling, price will definitely fill this imbalance up. Also, we don't want to be in trade for too long, monitoring trades and all of that. You want to be in the market and out of the market, taking your profits as soon as possible. Okay, and this is about the take profit is about 100 pips, I think. Yeah, no, 99 point something. That's about 100 pips. If I'm able to get 100 pips from a trade, I think I'm good to go. So I add my sell limit at this point. Let's go to like the 30 minutes time frame so we can. So this was the refined entry from the, I think we can stay on the 1 hour time frame. So we had our perfect distribution schematic play out here. All I needed to do is wait for the market to come back in and tap me in. So let's play. Markets went down, came close, and didn't tap me in at first. The market came, but I wasn't tapped in. I thought I had even missed the move already because it came close but didn't tap. So I just left my limits, and market came back up to tap me in. Market came back, tapped me in, though I was in drawdown for some time. I think drawdown of about 12 pips. My stop loss was 14.6. So the market tapped perfectly and the market went all the way down and our take profit was smashed. And this is the reason why you need to target zones like imbalance or demand zones when you are taking sales so that you can be in and out of the trade fast. So you can see once market tap the 3-hour imbalance, it tapped, went below it, mitigated the demand zone that was in this area, and market shot back up. Okay, that's why always set your target for every trade. Always know what you want for every trade. I'm entering into this trade with 10 pips stop loss, 15 pips stop loss, 14 pips stop loss, and I'm taking my profit at this level, at this imbalance field, or at this equal lows, or at this demand zone, or at this supply zone. So always set your take profit, set your stop loss at all times, because you never know when the market will reverse. And also, as at this point, once we broke structure right here, once we broke this low that came back to mitigate this last point of supply, this was the low that mitigated the last point of supply. Once we broke below this low, I had my stop loss move into break even. So I was in a risk-free trade at this level. I was in a risk-free trade at this level. Okay, so always set your stop loss to break even once we start breaking structure. Okay, so, and that was how I was able to get let me see, a 1 to 6 RR on Gbpcad using distribution schematics. Okay, so this is how simple Wyckoff distribution schematics is. We don't need all those lines and lines from Google and all of it. Okay, this is just it. Look for 3 drives up in supply zones and wait for a break of structure of the sign of weakness. Look for your LPSY, that is, and look for an unmitigated supply zone or imbalance, or at the areas close to the UTAD, or at your trading range, which is like the areas around the BC and the AR. At these zones, you will find the LPSY supply zone or imbalances where you can take your entry from. I hope you were able to learn something from this video. In my next video, I'll be doing a breakdown on the second Wyckoff, which is the Wyckoff accumulation schematics. That one is used to look for buys in the market. The distribution is used to look for sales, while the accumulation is used to look for buys in the market. Thank you for watching, and please subscribe and share this video to your friends, and kindly also click the like button. Thank you.